Thanks everyone for joining us for this lunchtime session. As you know, you've joined us here because we're going to have a conversation about impact investing. And so, of course, we've got Dan Madhavan here to take us through that. We are going to invite questions from you all, right? So this isn't Ask Me Anything, we mean it. And so I'll lead the conversation initially with Dan, but really do open up the chat, or feel free to put up your hand to ask a live question. We're a pretty small group, so no problem at all to raise your hand and we'll do a real question as we go at any point. And the challenge, of course, that we have really with any of the Ask Me Anythings is that we pick a very large topic like impact investing. We also did one last week on AI, two extremely large topics, and then we try to cram everything you might want to know about that into a 40-minute lunchtime session. So we'll do our best. But the benefit of this topic is that Dan and I also did this a couple of weeks ago in the Wade podcast. So Dan and I had a 45-minute conversation about all things impact investing, how founders can think of finding the right capital for their impact businesses, but also the different kinds of capital flows from the investor perspective through into impact businesses, the different types of impact businesses. So I will shamelessly spruik that podcast as well. And I think we'll send a follow-up email after this with the recording from this session, but also the link to the podcast too, for you to take a look at some of the topics that we talked about then. So Dan, we're not just going to, even though that podcast was excellent, we're not just going to recap exactly what we talked about in the podcast, but there were some really interesting concepts we discussed about, what is impact investing. So I'd love to start there. You have been teaching our VC Catalyst program for a number of intakes now, and have a breadth of experience right across the investment sector and into impact investing across the last 20 years in total. How do you think about impact investing when you explain to someone at a barbecue what it is? What is the way you simplify that, the complexity of what it is, into something that we can understand?
Yeah, thanks, Jess, and thanks for having me on here. You must be sick of talking to me after the podcast, so round two. But um, I don't know that it simplifies it that much. But my explanation would be, I often start with, well, all investments have an impact. There's ones, some, but sometimes we just don't know what that impact is. And so if every investment has an impact, what we're trying to do with impact investing is find those investments that we can be deliberate about having a positive impact with. And part of being deliberate is trying to measure whether the impact was actually as positive as we intended it to be. So, now I guess that keeps it quite generic in the sense that it could be any investment in the world, but I think that's actually the best place to start is that, any investment you make will have an impact. But, the trick is how do you be intentional and how do you know whether it's having the impact you want it to have?
Mm. And working in the impact investing space for as long as you have, how do you describe or articulate how the ecosystem works? Is it really just the same as, is it a niche within VC? Is it its whole own separate sector? How do you describe the ecosystem?
Yeah, it's interesting. I mean, it works very similarly to the way the broader investment ecosystem works in the sense that you have impact investing in infrastructure and you have impact investing specialists in VC and impact investing specialists in private equity and even nowadays you have impact investing specialists in public equities as well. And most people miss that the largest proportion of impact investments, whenever they do one of the sort of market sizing surveys, is in green bonds. So in the fixed income part of most people's portfolio. So it is impact investing, I think, is very broad. It's not an asset class itself. It can be within any asset class. I think probably the catch is that, and we spoke about this on the podcast, most people's experience of impact investing is um, from a lived perspective. So whatever they have engaged with or whatever corner of the market they're used to, they kind of see impact investing as being part of that corner of the market. And I think on the podcast, I used this idea of impact investing being a really, really big house. But it depends what room you entered via. If you entered that house via the venture capital room, you kind of tend to be really familiar with that room, and you may not even know that there are other rooms. So, part of I think what is not needed, but I think is great for everybody to kind of experience is that it's a much bigger house than just a room of VC or a room of private equity or a room of green bonds.
That's interesting. Does that mean then that the ecosystem itself is quite fractured, that people are sort of working in their rooms and not aware that there's a common thread in other rooms, or that it is quite a connected small ecosystem?
Yeah, I think the word ecosystem is an interesting one because I'm not sure the impact investing ecosystem operates in the same way as, say, the VC ecosystem operates, and a lot of people are familiar with.
Mhm.
We can come back to that word, but maybe as a community of practice or as a field, I think the impact investing field is still quite close-knit, even though people will be operating from different rooms at times. So there will be someone that's running an impact VC out of Melbourne that knows someone really well that's operating a social housing fund out of Sydney, because it is still quite well, relatively tight community, and the field is still relatively young. I don't think it's not the nascent kind of um, more experimental field it was maybe 10 or 15 years ago. It's far more established and it's much more mainstream, but it's still a fairly small, group of people that as practitioners.
And a good question here from Diana. Thanks for that. How does impact investing intersect with ethical investing, if at all?
Yeah, it does. And so I think the easiest way to explain that is to say if you take the universe of all possible investments and you said, well, I want to do no harm, or I want to like reduce, I want to, I don't want to invest in the things that are against my values or are in conflict with my values, you'd be reducing your universe to this. That reduction is an exercise in taking out the negative, right? So you're saying the whole universe is here. I want to reduce that by removing all the things that I consider negative, could have a negative impact. So I want to get rid of those. I'm not interested in investing in those. So you're left with a smaller subset of that universe. Impact investing goes a step further and it says, I'm not just interested in avoiding negative. I want to deliberately seek out positive things that could have a positive impact on people or the planet. So that's where the difference is. And probably the simplest way to explain it is impact investing could be a subset of ethical, and ethical is a subset of the total universe of investing.
Mhm. And often one of the common I observe the common questions or topics that comes up the moment anybody starts discussing the merits of impact investing is the potential trade-off between commercial returns and impact. How do you see that dynamic playing out? Obviously, each fund would have a different point of view on that, but how do you articulate if there's always a trade-off?
Yeah, I mean, there's definitely not always a trade-off. I think there's plenty of examples where that's been demonstrated. Um, it is such a binary way of classifying the impact investing world. I don't like it personally, but I get it's useful. And just to give for those that may not be as familiar with it, like this distinction between okay, can you make a commercial return and have a positive impact at the same time, right? And in some circumstances, the answer to that is yes. And then in other circumstances where you might be there might be an opportunity to finance an activity that just isn't commercial, you could still make a return, but it might be lower than you kind of should receive for the risk that your financial risk that you're taking. Okay.
Mhm.
And so the impact investing world kind of splits itself into these two camps of being commercial, or people call it finance first, right? And being concessional or impact first. And everybody over here says, and that's about 80% of there's been lots and lots of surveys done, but it's around 80% of impact investors say, look, I'm not willing to trade off my financial returns, but I still want to only invest in those things that have a positive impact. Okay. And they sit over here. And so they think about it as plus. I want a risk return, an appropriate risk adjusted return from a financial perspective, and I want impact. Okay. And then over this side of the impact investing world, there's about 20% of impact investors are willing to trade off. And they're willing to say, well, yeah, sure, like I'll invest in some of these things. But you know what? If something over here that won't deliver me a financial return that is appropriate for the risk I'm taking, but where the impact is so great, or so important, or so deep, or insert whatever word you want, I'm actually willing to look at that. I'm willing to take a lower financial return, as long as I can see that there's like a really uh, an important impact or there's some sort of impact available that I believe is really important. So that trade-off conversation is an interesting one, and I would say a very inexact science. But the impact world kind of splits itself into those two.
Mhm.
Um, we could geek out on this idea of additionality, which is some people argue that, well, actually, markets solve for this over here, so you don't need to be an impact investor. But that's probably that's a whole hour in itself too, and many more hours on top of that to geek out. So the easiest way to think about it is finance first, but I want impact on top, and I'm willing to trade off my returns if the impact is great enough. But both are still looking for investment returns. They are looking to get at least their capital back and a return on top of that. It's not that's what distinguishes it from philanthropy. Philanthropy, you're happy to give the money away and not get it back.
Mhm. And so the Impact Catalyst course that we've co-created with you came out of you being one of the lead facilitators for the VC Catalyst program for a number of intakes, as I said, and questions coming up from the participants of VC Catalyst, people coming in to learn about, venture capital investing, and perhaps having an idea that a question around what is the intersection between VC and impact, and sometimes it's there and sometimes it's not. And after one of those such discussions, you said to us, I think we need a whole separate course on this, and this is why. And initially we said, what's the Venn diagram of the two courses? Are we going to have two courses that are 80% similar or not? And you said, absolutely not. Can you take us through how you articulate that, and what the overlap is or isn't between VC and impact investing?
Yeah, sure. And I think there is a very small overlap, and that's where VC intersects with impact investing. But actually, VC is a very small part of the impact investing world. Um, I think what came up for me when we spent too much time as part of that VC Catalyst cohort talking about impact. Well, not for me personally, but for the course itself. It wasn't a course on impact, so we had to kind of say to everyone, I personally love the conversation about impact, but we're actually here to talk VC. So that was the kind of genesis of the idea of, well, maybe we need a separate space to talk impact. But so one of the things I think one of the things I'm really keen to do is help people understand what all those rooms are, right? So there are rooms that are dedicated to real assets, so financing things like social and affordable housing, renewable energy infrastructure, specialist disability accommodation. There's all sorts of space rooms that are dedicated to the financing real assets that can have an impact on people and the planet. And then there's whole other rooms dedicated to financing businesses that can have an impact. And some of those businesses are VC appropriate, and some of them are not. Some of them are appropriate for private equity. Some of them are not. Some of them, will have the potential to provide a commercial return, and some do not. And there's a lot of complexity in kind of figuring out, well, how do you kind of order that world of investing in impact businesses? And there's one of the things I'm looking forward to sharing is developed these five different models for where businesses can integrate or be a vehicle for impact. And some of these are quite well known. So, one of them would be where the impact is embedded in the product or service that a business has. And funds like Giant Leap, which is an impact VC, are focused on trying to on looking for those types of opportunities where the business actually, as it scales financially, also scales in lockstep with its impact. Because the more it sells of its product, the more impact it's having, or its service. But there are other models. So, for example, those models that seek to employ disadvantaged groups of people. And so, we've got, I know one of the participants, I'm sure she won't mind me mentioning, Beck from Street was part of that cohort, and Beck's obviously got a model at Street where for many years she's been employing young people who are experiencing homelessness into her hospitality businesses, and providing them with training opportunities and long-term employment opportunities. And so, what does that do? Investing in businesses, like, how do you invest in those types of businesses, and what are the implications from both an impact perspective, but also from a financial perspective? So, so there's real assets, there's investing in businesses, and there's different types of those impact businesses. And then there's the really esoteric kind of highly specialized areas within impact investing, like social impact bonds, where you're investing and your returns are generated by the social or environmental impact that you're having. And they're often difficult to understand, and I think we can bring a kind of shine a light on how to think about them and how to unpick them, and what the kind of key ingredients of those are. And then maybe just to finish on that, the other big one for me, which is a very live conversation for me professionally, is this emerging area of blended finance, where you're not having to actually split the world in two of concessional and commercial and concessional, but you're actually structuring investments that hold both of those at the same time. So you could come into a fund and say, well, I want to be in the commercial layer of that fund, or in the concessional layer. It could be a fund, could be an individual deal. And we closed on a $25 million deal yesterday, which has exactly that, $8 million of concessional money and $8 million of the US, that is. So about 12 mil of concessional money, and just over 12 mil of commercial money.
Yeah, incredible. And so it's all very complex, and perhaps why you're not allowing me to describe it simply as an ecosystem that is all easily mapped and stitched together. We've talked a little bit about the relationship between impact investing and VC, but what about the other side? Certainly what we're seeing in Wade's audience is a whole group of organizations that might have traditionally provided capital in a philanthropic mechanism, say family offices or foundations or other things, providing capital to have an impact in the world from a philanthropic perspective, and now are grappling with impact investing. Tell us how you're seeing that and how you would describe that relationship at the moment.
Yeah, and I think maybe just to grab the comment around, because I don't want to sound like I'm not answering your question, but I think part of the course is about me not answering the question. So and what I mean by that is, the idea behind the course was not for people to have to sit through 10 days of listening to Dan. It's actually about getting all of the pioneers of impact investing, both here and globally, in front of the participants, and then being able to engage with some of the people that did the first impact investing transactions, that built the very first funds, that did that from fund managers, from startups, from government, and have an opportunity to actually engage with them, and not only hear about, the like very practical examples of how they built that fund or how they did that transaction or why they did it, but also the intention that underpinned that. Like, why did they get into it? What were they hoping that that area of impact investing was going to become? When they started it 10 years ago, and is it living up to that intention? What's working well, what's not? So yeah, if I'm being a little bit, I don't want to say evasive, but if I'm not directly answering all of your questions, the whole point of the course is that I'm not answering all the questions. We'll have far more intelligent people than me, and it's the who's who of impact investing in Australia and globally coming and talking to the course. But to answer the question, that specific question, I think with foundations and often with family offices where they have, many of them have a family foundation as part of the group as well. Um, they start out with this idea, but a foundation has an embedded social or environmental mission. So the idea is that that the purpose of that entity is to have is to contribute to some sort of social or environmental change. So for most foundations, they're giving away 5%. I think it's now going to become 6%, mandated 6% a year. But traditionally it's been they give away 5% of their assets each year in grants. But what do they do with the other 95%? Right. And, there's always been a kind of a bit of an adage within the impact investing world, which is, if you're giving away 5% to fight climate change over here, but then investing 95% in oil and gas over here, I mean, A, that's dumb, and B, you're probably diluting significantly the impact that you are explicitly trying to have within your mission, your stated mission. So,
Mhm.
that's why a lot of those foundations in particular are kind of obvious candidates to be impact investors. And that doesn't mean they have to do the most wild concessional stuff. They could still try and maintain their the returns that they're wanting to have, because we get that they're funding their grants through those returns. But at a minimum, they should be at least thinking about how they could extend their impact with their investment activities.
Mhm. And there are a couple of questions coming to the chat, and I'll ask those about the who should do this course in a moment. When we decided the curriculum, as we do, I mean, some people on the call might not know, but the way Wade develops all of our programs is we work with subject matter experts like Dan, and identify a knowledge gap in the market. So where is there knowledge missing, that, and what is the scope of that gap, and then we obviously create a course that fits that. And so Dan, you had a really clear point of view on what needed to be in the curriculum and what some of the most helpful components would be. What do you see as the most significant or the most notable misunderstanding people have about impact investing, or the key message you would be hoping someone would pick up from, or learning they would bring from a course like this based on that knowledge gap they have now?
Yeah, I think so. Number one would be that it's one thing, and it's not one thing, like it's many things.
Mhm.
I won't go into the analogy, but I like it's like the Olympics, right? Like,
Good analogy. You can go
yeah,
into
like
it. It's in the podcast.
you can call it the Olympics and everyone knows what you're talking about, but the Olympics is not one thing, right? Like, it's actually a collection of many, many things,
Yeah.
many of which are like completely different to each other. Throwing a big steel ball through the air is has nothing to do with four people sitting in a boat and rowing. Like, they're completely different things, but they all sit under this word, the Olympics. And same with impact investing. So giving people um, a a sense of the breadth of impact investing by bringing specialists in who are experts in every event at the Olympics. So you'll get the gold medalist rower, the gold medalist shot putter, the gold medalist 100-meter sprinter come in and explain what it is that they do and how they do it. So that's the first thing. And secondly, I think would be this idea around concessional and commercial, and exploring that in a way that provides people with a much deeper sense of the nuances of impact investing, which are not as crude as it sits in the commercial or sits in the concessional bucket. And exploring that in detail again with experts that have designed um, investment structures and funds and done deals and made investment decisions by understanding and unpicking that nuance. And I would say the third thing, which is going to be a bit, I think, challenging for many people, is to explore the case against impact investing.
Hmm.
Why it might be a terrible idea, why it might be a load of shit, that people have made up to feel better about how their money is, could be making no real discernible difference at all, but they get to feel better about it because they can pretend that it is. So that's as provocative as I can be in that statement. But the idea was to not just engage with what I think the real benefits are of impact investing, but actually challenge some of the ideas around, well, is it real? Is it really having an impact? If so, where and where do we pretend it might be, but we're not sure that it is?
Hmm. Yeah, great. And I do invite the people in this call to ask any follow-up questions you have to any of this that Dan's talking about. I'll go to a couple of the questions here from Mitzi around the VC Catalyst program. And I think a number of people on this call who've registered have done the VC Catalyst course already. Who do you think the Impact Catalyst course is best suited for, given that there isn't much overlap between the concepts of VC and the concepts of impact? Who is it? Who is the program for?
Yeah, I think it's so I'd answer that in two ways. I think number one, it's just firstly, people that are curious about or want to know more about impact investing and want to go on an absolute whirlwind tour of getting everything you could possibly need to know about impact investing jammed into a 10 half day experience, right? Like you will literally hear from everybody that you could want to hear from. And get access to like ideas in every part of the impact corner of the impact investing universe. So for someone that wants to get like get the whole lot in a very short space of time, that'd be one. The second thing is, I mean, you could answer it more in terms of roles. Like it might be someone working in a family office, or it might be someone who has a family office that's like, yeah, I want to understand, I want to feel better equipped to engage with impact investing, or maybe that person's working in a foundation, or they could be working in a financial institution, and they're like, we've been thinking about whether this is something we could take to our clients or build a product around. Likewise, a few of the people I've shared the course with are working in government or non-profit organizations and are thinking about how they might use impact investment. I'm speaking with a few people in government who are thinking about the design of impact funds, where government may play a role in supporting that design or contributing as an investor. And understanding the landscape and how investors think about impact investing might be really useful for them.
Interesting. And what would you say? So we say, like, what are the key takeaways people will get from the course? One is around whether we use the house analogy or the Olympics analogy, but having a blueprint or a run sheet of all of the other rooms or events that there are,
Yep.
perhaps to contextualize what they're already doing alongside everything else that's around them. At the end of the 2 weeks of VC Catalyst, the participants have an investment thesis that they've worked through with experts and their peers throughout the 2 week course. What is the outcome at the end of the impact course?
Yeah, so I think that I'd put that into three. I'd put that under three headings. So one would be just knowledge of the space. So I think at the end of that 2 weeks, people will come away with a really both broad but also deep knowledge of every room and what's in each room. Um, I think number two would be, similar to VC Catalyst, relationships within a cohort of people and a sense of community around people that are exploring this space and would hopefully be helpful to them on their own journey as they're working through where they might participate in the impact investing field. And I think that sense of community for VC Catalyst has been incredibly important, and I hope that we can replicate that with this. And then the third thing is, yeah, the opportunity to distill their own thinking through the exercise of having to build and articulate their own investment thesis. And I think what will be slightly different to those that are familiar with VC Catalyst is it won't just be an investor perspective. You can choose to take that perspective. If you work in government, you can choose to develop your investment thesis, which might be around policy initiative that again could be a fund or something like that. If you're in a family office or a foundation, sure, you can do it as your own kind of investment thesis, similar to VC Catalyst and how you would invest. You might design a fund. Or you may design a deal that where you could be raising capital as a non-profit organization. So it'll be a little bit more of a choose your own adventure, but the output will be the same. Something that has kind of enabled the participant to distill their thinking and be able to articulate that in terms of, well, this is how I am looking to engage with impact investing.
Interesting. And we've already seen that. I don't even know if you know this, Dan, but based on the people who've signed up already and who are doing the course, it's a real mix, right? And it's people that largely have an investment background in some way, but not sometimes in impact investing, but in one of the rooms or one of the houses. So we've got people signing up on an individual basis who've perhaps been doing angel investing from an impact agenda for a while. Also, employees at research institutes who are thinking about capital flows into their projects, and also social housing, asset management, and rolling out social housing projects. So, real kind of mix of participants coming in already.
Yeah, no, I think that's the ideal. So I'm going to completely contradict my earlier analogy to where I said that it's like the Olympics, it's not one thing. And I'm going to say that in some ways it's important to think about it as one thing, right? And when we were first, like this is going back now 15 years, I think 15 years, no, 12 years. Originally, people really struggled with impact investing, like the concept of it. And I used to have this analogy of the platypus, and because most people don't, like when Europeans first came to Australia and saw the platypus and sent news back to England, that they'd found this animal that had the feet of a duck and no, the bill of a duck, the feet of the feet of an otter, and the tail of a beaver. Like
And a poisonous
yeah,
spine
and
on the
like
couch.
people in England are like, that's not true. That's like, so you can go Google it. There's all these newspaper articles from the time saying this hoax of an animal, because clearly that's ridiculous, right? Like it's not some bizarre love child of an otter, a beaver, and a duck, right? Like it's not. It's a platypus. It happens to have attributes of those three other animals, but in no way is it related to those three. It just has similar attributes, right? But it's its own thing. Like you got to think about it as a platypus, not as three animals in one. And I think originally people were really struggling with the concept of impact investing because they're like, well, is it part philanthropy? Or like it's this weird love child of philanthropy and investment and government, like, kind of coming together. And like those three things can't come together. They can't, you can that's ridiculous. And it's not until you kind of look at it as its own thing, that you kind of go, okay, yeah, like that could work. Like actually investing for social or environmental outcomes, which are often, most people pass that baton to government to to figure out. So it's in the private sphere, but you're trying to make money as an investor through that exercise, was a real struggle conceptually for people. So in some ways you got to think of it as one thing, but then you've got to look at well, under that you've there's many different types of activities.
And what was quite interesting in a couple of the VC Catalyst intakes, but one in particular is some of the participants that were most interested in impact were from very different professional backgrounds. So one was from a property investment background, looking at social housing and retirement living, and the other one was Beck from Street. And on the surface, as investors, it might appear that they don't have much professional overlap between what Beck's doing and what a property investor might do, but they were both able to think about the different capital structures that might enable the types of projects that create the impacts that they were interested in, even though they're from arguably different worlds.
Yeah, and I think that's in many ways that's you're hitting on kind of the whole point of impact investing, right? Which
As
is
a platypus, not as a series of different.
yeah, but also starting from, and I might use Beck again as a bit of an example, but um, you're often starting with, well, what change do I want to see in the world? Like, and often that's a problem. Like you're like, I don't like how that, like there's not enough
Mm.
social housing available, or there's like whatever the problem is that you're looking to solve.
Yeah,
And then, as someone as entrepreneurial as Beck is going to go, well, what capital is available to me,
yeah,
right? Okay, yep, sure, I could get some grants and they could do these things, but I could also, if I ran a business and had an enterprise model, that might open up other capital that I could access. So, but the underlying premise is, well, at least I hope it is what impact are you wanting to have? Like, what change are you actually trying to bring about? And that's why the measurement bit, which is often not overlooked, but sort of underdone, is such an important part of impact investing as a practice.
Yeah, great. All right, well, we're on the home stretch, so Midsy's trying to get us to ask questions. If anybody has any questions, please put your hand up and come off mute, or pop your question in the chat here. To take us out, Dan, we've promised with the course that we'll, I mean, I don't want to stretch your analogies too much. I mean, you've got so many, I can't help, but we're going to draw the platypus. Is that
Yeah, yeah, sure. Maybe that can be the
blueprint of
mascot.
how
It can be the
to
mascot. Yeah.
That's right. But the course has been designed to take the participants from the very different backgrounds that they're from through the principles and concepts and history of impact investing, so that they can sort of see the whole landscape of what it is, and also introduce them to a number of the core frameworks and concepts that are used regularly in that practice, and through a really wide mix of different guest speakers, as well as the participants themselves really get great exposure to the breadth of the industry, but also come away with the relationships from some of those key people. To put you on the spot, Dan, can you let us know a couple of the speakers that you've invited along that perhaps have said yes so far?
I'll do better than that. I'll tell you the ones I haven't even asked yet. So,
Right. I'll say yes because
and
now.
hopefully they don't watch this and go, "Oh, that's interesting. I haven't been asked that yet." So, I mean, the ones that I have asked, I think it's going back a little while now, but we'll lock them all in over the course of the next week or two. So, Rosemary Addis, who was the Australian representative on what was originally the G8, the Global Task Force on Impact Investing. So she's one of the OGs of impact investing globally. So she did say yes. So and so did Richard Brandweiner, although that was before he took on the role of CIO at the Future Fund. So I do need to refresh that to make sure he is still available. But they're two people that I was very much involved with originally when I was at Impact Investing Australia. So Rosemary was the chair, and then handed the chair baton to Richard. The CEO there, David Hetherington, we will get in as well. And Impact Investing Australia is the field building kind of organisation in Australia. Erin Kuo, who's a great friend of mine, who's at Yarra Capital, but was CIO for me at IAG, Chief Impact Officer at IAG for me. I'm keen to make sure we have someone from Social Enterprise Finance Australia, SEFA. I'm keen to make sure we've got one of the team from Giant Leap, maybe more than one, if I can twist Will and Rachel's arms. Would love to have, and I'm sure we can get Matt from Conscious in conscious investment management. But I'm actually quite keen to get a couple of the large foundations and family offices out of uh, Singapore and possibly get a couple of folks out of the US as well to share some of their experience. Um, I am also a couple of people that have worked on some really interesting transactions. So we'll get someone from the team at Department of Foreign Affairs and Trade that just did this blended finance structure we closed yesterday to talk about that. Hope someone from the Minderoo team and also the Paul Ramsey Foundation team to step through that transaction and the mechanics of that. And I'd love to get Leonie Kelly, who designed the Rhino impact bond, which was an impact bond focused on that where the returns were linked to preservation numbers or the increase in the black rhino population. So yeah, some really interesting pointy end transactions as well. We'll get some people to come in and talk about that.
Fantastic. And I'll just take this great question from Diana as well in the chat here, which is something that we haven't touched on really is about super funds.
Yep.
And so Diana's question is, have you seen any uptake from super funds in terms of providing impact investment as an investment option for their members? And perhaps more broadly, how generally you see super funds interacting with impact investment?
Yeah, so we'll aim to get a few people from the institutional space in as well. So maybe there's a couple of people I want to dob them in, but there's probably three or four people from that we can get in from at least one or two of them from the super environment. Um, how have I seen? So I think they have made steps in regard to doing the commercial stuff. That you know that they would argue, and I think they personally I think they're right. They can't do the concessional stuff. They don't have that's outside of the scope. So they can only they can't make a decision to participate in the concessional type activities. Where they have invested, I think they've generally been very conservative, which is probably appropriate. Um, do I think they've done, now you get into the realm of opinion. Do I think they are doing enough? No. Do I think they create easy excuses for themselves to do more? Yes. I'll happily challenge them in the course on that. But I think part of it is sort of unpicking some real reasons for and real constraints that they have, including ones of scale, like they have to invest large amounts of money, and sometimes there's not that many products that can take those types of dollars. And they're looking for track record of things. But my observation is that they're not doing, at least for me, they could have a much bigger impact than they're having.
Maybe we could get them along to the course, not as guest speakers.
Possibly, possibly.
Great. All right. Well, thank you so much. That's all we've got time for today. Thank you, everyone, for joining. And thanks to Dan, of course, for sharing all your wisdom. We've just popped in some information about the program there, as well as the podcast, where there's even more analogies than what Dan covered today. So if you want to hear them all, the large house in an Olympics run by a platypus, and that's impact investing. So thanks, Dan, for joining us. And we're going to be extending the 25% alumni discount to anybody who joined this call today, if you'd like to come along to the program or refer anybody into the programs. There's lots of information coming your way now. And thanks again to Dan and the team for joining.
Thanks all. Thanks for having me.